Hi, these are more somber times than usual. We see a big conflict going on in West Asia or Middle East, as it used to be called, where a number of countries are involved. A lot of viewers would be interested in market impact, and I will come to that. But let me first give you a bit of a background, with the caveat that I am not a geopolitics expert, but I have looked at facts and data for a long time. First of all, this is something I pointed out in January itself in one of my interviews, was that Iran is not a small country. To give you a sense, it is more than half the area of India. So it's a large country with a large population. And I had said then itself that if you strike Iran, there are going to be consequences. It is not a country you can overpower very easily. They have the arsenal, they have the guard, they probably have more of a stomach to take casualties than the Western nations do. The other thing is the geography of Iran is such, with the mountains on several sides, with salt deserts, as a friend pointed out, which makes on the ground warfare near impossible. So now at least the stated strategy is that we strike from the air, and then the Iranian people do a regime change, but it never happens that easily, because even if you take out the leadership, and I believe there were 4 levels of contingency plans, that if so and so is no more, then who takes over, and then who takes over for every key position. So first of all, that is there. The other thing is that you have the armed guard, the IRGC, which is going to be still there with their guns, and they were willing to kill tens of thousands of protesters not very long ago. So that has not changed. The other thing which ironically I understood from the Iranian revolution itself, when it happened in the late 70s, I was a child, but I understood that, and which is a lesson I've carried all my life, that saying that anything is better than this never holds. And that's what people wanted a regime change in Iran, and that happened through the revolution, but what they got was probably worse than what it was replacing. So those are the truths of what is happening there. And Iran, I think, has been strategic in trying to basically increase the risk perception of the region. So whether it was closing the straits, which meant not just that oil wouldn't move, maybe someone can provide military protection for oil tankers, but they made the risk premium on the oil movement so high that practically speaking no commercial oil will move through the straits. The other is that even trying to make a show of trying to hit some of the major civilian targets in the region. Again, you are increasing the risk premium, you are really hitting the economy of the country. I think that was the countries. So that appeared to be the objectives, and to an extent I would say that they have succeeded. Now coming to the markets, now this is a thing which actually we did this study at the time of the Russia-Ukraine war 4 years ago. We went back 50 years, looked at every geopolitical event. So right from I would say things like the 2 Gulf Wars, Afghanistan, 26/11, US bombing Libya, all of that. And what we found was that in every single case, it is not a statistical study, it is in every single case, the markets, the stock markets around the world had forgotten about it in 6 months to a year. Yes, there's turmoil around that event, but after 6 months, 1 year, the only markets impacted are the ones directly in the conflict. And normally conflicts last a long time. No conflict gets over in a week. So those were the learnings, that if you're on a very narrow focus of the markets, normally it does not impact the markets. And that's what happened actually with Russia-Ukraine also. I remember 6 months after that, there were headlines in the papers that the market has forgotten about it. I said I pointed it out on the day. So, I think do not panic on the market front. As far as oil is concerned, first let me tell you what we did on oil a few weeks ago, and that was not a call that this conflict would break out, but simply in the trajectory of the oil prices, it appeared to us that the risk reward was in our favor in terms of oil going up. So in our last rebalance about I think a month ago, We further underweighted US equities and we increased our commodity exposure, both oil and metals. So, that has played out well. Having said that, again, let me tell you that every time there is a conflict in the Gulf, oil prices go up. But remember that no one wants the oil flow to stop. This is very important. Whether it's the old ruler, the new ruler, the invader, no one wants the oil flow to eventually stop, because they are there to control the oil. I mean, that's the cash cow. So whether it is, for instance, the ISIS, no one wants the oil flow to be disrupted. So eventually that doesn't happen. But I mean, we are still in very uncertain times, because as I said, the adversary, Iran as an adversary, is no pushover. And what eventually happens in Iran, whether that will be an improvement on the regime they had, is another question mark. But those are humanitarian questions. As I said, on the market side, I do not expect any great lasting impact. Oil was anyway scheduled to go up a bit, and you might see, of course, short term more turmoil in oil, but eventually it will settle down to a more normal, maybe still an upward trajectory. As I said, that was our call even before any of this started. And so I hope this gave you some perspective.